Why is that? Is that got to do with the yield curve, do you think, and the possible inversion of the yield curve? Why do financials get hit so bad?
I think that could be part of it, but there's a lot of headline news that we're seeing, not just here within our own borders, but overseas, and I think the markets react to that. And obviously, different sectors within our economy react differently. But I actually agree with one of your earlier guests, said the underlying fundamentals are pretty strong. We're seeing some good things. I do think the fact that interest rates are going back to normalcy is great. Obviously, the tax bill was good for financials, banks specifically. And to your point, we had a bipartisan victory last year in that Bill 2155, which provided a modernization and meaningful legislative relief to things in the financial sector that had gone a little bit awry under Dodd-Frank.
So you're a very powerful man, but you can't control everything that affects the markets, I have to say. But let's talk about what you do maybe have a little bit of influence over. As you said, 2155 got through. There's been a lot of replacements of regulators that are more inclined to be more reasonable, I think you would say, with regulation. What's left to be done?
I'll surface three things with you, David. One is the modernization of the Community Reinvestment Act. Comptroller Otting is doing that. He is the lead on that, and the other regulators at the FDIC and the Fed will obviously work very closely with him to allow banks to better serve low and moderate income communities. That's really important. Also updating our AML BSA rules. Banks churn out millions of pieces of financial data because we're patriots and we want to work with the law enforcement community to go after the bad actors. But that system can be improved.
Is this money laundering?
Yes, absolutely. And everyone on both sides knows it can be improved. It can be more efficient and effective. So that's something that we're also working on. And then tailoring. You talked about those new regulators. And you know what they're doing? Something that we think is totally appropriate. And then we're moving away from these artificial asset thresholds that were set in Dodd-Frank, and instead of looking at banks and supervising them based on activities, business model, and risk profile. That's the way we should. That's our ideal supervisory framework. And Randy Quarles, the new vice chair of the Fed, is point on that one.
So speaking of Randy Quarles right now, he was out yesterday saying they're paying a lot of attention to leveraged loans. He's not the first central banker we've heard that from, not just in the U.S., around the world. A lot of concern about that. We had Robert Tipp from PGIM on earlier today in my morning program, and I asked him about this. I said, what can the Fed do about it? He said, well, frankly, if the banks were issuing the leveraged loans, the Fed could really have a direct effect. It's a lot harder because so much of that comes from outside the regulated banks. How big a problem is that for our economy?
This is the next area of potential systemic risk. Within the regulated banking sector, I think the U.S. regulators and the industry working together have done a very good job to look at and identify risks. To your point, outside, Bloomberg last week put out a note that said they estimate that there's $10 trillion in a shadow banking system in China. The Financial Stability Board just today talked about that issue. So that's clearly an area where our regulators working with their global counterparts and FSOC, I think, need to be very vigilant. But I will say, in terms of improving safety, soundness, stability within the U.S. banking sector, we've made dramatic improvements in the last 10 years that we're very, very proud of and I think are very important.
So finally, we're mindful of the fact that tomorrow is the funeral service down at the National Cathedral for George Herbert Walker Bush. You served in the White House for 41. Tell us about the experience.
I'm so honored to. I had a very unique perspective. So I worked in the West Wing in my 20s. Everyone else were these icons: Scowcroft, Fitzwater, Sununu, Andy Card, all these amazing public policy servants. And I was the young guy making sure they had coffee and copies and answering their phones. But I'll tell you what I loved about the 41st president. He would walk. My office was right next door to the Oval. Every morning he'd walk by, I'd say, "Hi, how you doing?" He'd be nice and kind to me. And his sense of humor, his grace, were things that were not lost on me. And there's a reason I'm holding David this Sharpie, because he always had a Sharpie, because he was always sending a thank you note to someone. So we kept a big stack on my desk, and it's a habit that I've kept with me now, nearly 30 years later.
So as we hear about this, it sounds like a wonderful time and a wonderful way to run a shop, whether it's Republican or Democrat, just a good way to conduct yourself. Is anything left from that? Is there any way to get back to it? Because it doesn't feel like what we're doing today in Washington.
Well, I sure hope so. I think we can return. I think this new Congress, anything we do, of course, will be bipartisan, because you have a Republican Senate and a Democratic-led House. So that's an opportunity for bipartisanship, like we saw in 2155 last year. But I sure hope so. I mean, the former president, his background of being in military service, the head of the CIA, an ambassador, a member of Congress, a vice president for 8 years. He was arguably the most qualified person ever to be the president of the United States. He did so with dignity, with grace, with emotion, and with humor. And I think in part, he invited Dana Carvey over when Carvey was lampooning him mercilessly.